So Jeff, I would say, look at some of the headlines you're seeing today, right, with this potential new strain of COVID in the UK. I mean, you're seeing oil prices fall, you're seeing gold prices run up $20 an ounce. I mean, those are the kind of things that are more of that risk-off trade, which has not occurred in the past 9 months since March. You've had this trajectory of the market, which has been straight up. So I think the consensus is now with vaccine deployment coming out in early 2021 is that the people think that the world's going to go right back to normal by sometime in late summer, fall. I think if that consensus is wrong, then I think there's a lot more downside to the market. And the reason why you'd see that is you'd actually see expectations, fundamentals get caught up with expectations. And at this point, I would say expectations are built in that, world's coming back to normal very quickly. But I would say it's about a 30% chance or 40% chance even that people find out sooner than later that fundamentals aren't holding the market where it is today. It's really speculation that's holding the market.
David, can I get some direction on the dollar? Because you were discussing the fall in the dollar with us earlier this year and calling some dollar weakness. And we've now had a further stimulus plan that has been agreed but needs to be voted on. What does that mean for dollar direction from here?
Yeah, well, I just think it shows more expansion of, fiscal policy, and you're seeing more balance sheets that are expanding more and more. You're seeing global debts, something like $277 trillion in 2020. And I think just that expansion of monetary and fiscal policy is ultimately just devaluing the dollar and really hurting the purchasing power of the consumer. And ultimately, that's going to lead to either, increased inflation, or even, I think, more than likely, you could see stagflation similar to the 1970s. And that's another, I think, trigger when we talk about a stock market correction that could exceed, 20% from these levels. It's something out of the norm that the market doesn't see, because typically the market today is saying that inflation is going to be, below trend still for some time to come, even with all the global debt increase and the expansion of the monetary system. So I think the way you look at it is, if you do see inflation occur, then I think ultimately the market's going to have a pretty nasty fall.